Hi everybody, we're just about to go live. My name's Russell Markham. I'll put the camera on me very shortly. I'll just leave the main page here. We're starting just in the next 15 to 20 seconds, just waiting for it to go 10 o'clock my time in Queensland, 11 o'clock Sydney time equivalent. It looks like we're just about there ready. So give me a sec and we'll get going very shortly. All right, let's get going. So welcome everybody. Building a powerful watch list of stocks for 2023, and we'll show you how. How exciting is this? It's an incredibly powerful webcast, and thank you for those attending. And no doubt we'll also have a lot that will be watching the recording as well. So welcome. Let's put the camera on myself there for a second there. Transition it across, just make sure. I think I should be now on the camera. My name's Russell Markham. I'm the Director of Education for VectorVest Australia, and I've been at VectorVest now for coming on 12 years, and I've really enjoyed teaching many people. I've taught investors in Australia, Hong Kong and Singapore, and I've also had the privilege of going to VectorVest head office in the United States and meeting a wonderful dedicated team of educators, people that really care, really want to make a difference in other people's lives. So welcome, thank you for coming along. Before I get going, let me just transition across. So here we are, I've got the controls right. Transition across, and let's just quickly read the disclaimer statement. To find out more about our company, please check our webpage. There are our license numbers. In addition to, please note today, I will not be providing personal advice. Please speak to your financial advisor for personal advice. I'm licensed for general advice only. Past performance not a guarantee of future results. Any forecast backtests used or discussed today, it's a guide only, and those results may be affected by unknown risks or uncertainties. Okay, so there is the disclaimer. Let's get into it. Without further ado, let's jump straight into it. Fundamental and technicals combined. So what I'm going to do today is I'm going to build a watch list of stocks combining both fundamental and technical analysis. And what I'll also do there for you is I'm going to show you exactly, let's transition across, just make sure that you're seeing my screen. I'm going to build it such that you can identify it very easily. Now, when I was putting the slides together, I'll be honest here, when it's transitioned across to myself, when I was putting the slides together, I thought, my goodness, I've only got literally 5 or 6 different slides here, because that's all that's really required to build a perfect watch list. And I thought, how am I going to fill up half an hour slot? You know, I can get through this so quickly, but the beauty is that we can spend a bit more time looking at the type of stocks we pick on here. And I thought, you know what, there's no point in making it complicated. What's the point? If it's simple and easy to achieve, then show the people how, because at the end of the day, you and I as investors, we want things to be nice and simple, don't we? We don't want things to be overly technical. All right, so I've logged into VectorVest. You get greeted by the welcome tab here when you first log in. You'll notice right at the start here, it talks about build a watch list. So if you're wondering how we did this today and you need a refresher, if you take out a trial, I'll show you the link at the end, you can just simply log into VectorVest and click on here and away you go. VectorVest will do it for you. Let's do it manually ourselves. I'll show you just how quick and easy it is to do. All right, so what I'm going to do here is I'm going to click on viewers and I'm going to go to watch list viewer. And over here, I've created one called a group here called Hot Topics of Interest. All right, so on the Hot Topics of Interest, just bear with me. I'm just tidying it up here to make it nice and easy. I'm going to remove this out. I'm going to show you exactly how I built this. It's real quick and easy to do. All right, so I'm just going to delete these 2 here, and I'm going to repeat the exercise that I did this morning, just to show you just how quick and easy it is to do. All right, so just showing you that we create a group or a folder if you wish. It's really simple in VectorVest. You just simply come into your watch lists and then you create a new group. In this case, all right, so select that. I'll put in the name, Hot Topics of Interest. It's the first one, first cab off the rank. Then once I've created the folder or the group, all right, I then create new watch list within that group. So I've gone into this tool here called Viewers in VectorVest, and I've gone to Watch List Viewer. If you're new to VectorVest and you've never seen this before, don't worry about it. This is really simple to do. If you get stuck, call our support team and we'll step you through it. The welcome tab steps you through it as well. So what I'm going to do here is I'm going to call the first one here growth and income. All right, so don't get caught up on the how to what I'm clicking here. It's more the methodology. Once you see the methodology, you'll say, oh, I get it, and then you can go back and see exactly how I did it here. It's not overly challenging. Believe you me, you'll get to grips with it very quickly if there's a will. All right. So first up, what we're going to do, we're going to use VectorVest to find us the best fundamental and technical stocks out there right now in Australia with a click of a button. So within viewers, I went to Watchlist Viewer, I created my group, I created my watchlist with my group. Now I'm going to go to VectorVest here, and I'm going to go to Stock Viewer. All right. I think a few of you are saying, oh, you can't see what I'm doing. There we are. Can you see what I'm doing now? Have I transitioned across correctly? Let's just double check. Thank you for that, the chat there from one of our members. Thank you. All right, so don't worry, you haven't missed anything. Let's just quickly revert back to what we were doing. All right, so what I did is I clicked on viewers. All right, I then went to Watchlist Viewer. All right, and I created a watch list. So I created a group, so a new group, and I gave it a name. Thank you for letting us know. All right, and I gave it a name, Hot Topics of Interest, right? So I typed it in, and once you've typed it in, you click Add. In this particular case, I called it Hot Topics of Interest. Once I've created the group, on the drop down, I created a new watch list, and again, I gave it a name. All right, so in this case, growth and income. How about that? All right, that's what I called it, and click Add. Now to speed things up, I've done it already, so that's where I'm sitting at now. All right, so thank you for letting us know there in the chat box. You haven't missed anything. All right, so thank you. Now, what we're going to do. So we were in viewers, we've created the group, we've created the watch list. It's all very well to create the watch list, but what's going to go in the watch list? And this is where VectorVest comes in. So what I'm going to do here is I'm going to click on Stock Viewer. All right. And this will find me the best combination of fundamental and technical stocks out there in Australia right now. All right. As of 1 March, here are the best combination of fundamentals and technicals that money can buy. All right. So what I'm going to do here is I'll graph, say, the first one here, just to show you. All right, Stanmore Resources. So you can see pretty smooth left to right price pattern developing here. Pull it back a bit in time. Look at that. My goodness, it's gone from 76 cents to $3.50. And there is the price. I'll put on the earnings. So this is a 12-month leading forecast on earnings. It looks at historic, current, and forecast. All right, earnings. And it tells us companies that are growing their earnings or companies that are growing their share prices. You'll see that correlation time and time again. All right, so that's what we're trying to achieve. We're trying to find these companies that are consistently growing their earnings. We want to make sure they've got good fundamentals. So in other words, growing their earnings, good balance sheets, safe stocks. Good technicals. Technicals are companies where the short-term price momentum is moving. So we use this tool here, relative timing, RT. You can see it's going up on average. Short-term price direction, short-term price momentum as the technicals lift up. It's telling us that this company is moving upwards. So we combine that with both the fundamentals and the technicals. Now to cut to the chase, what I'm going to do here is I'm going to grab a handful of these top fundamental and technical stocks and put them into our watch list, and from there we'll dissect it. How about that? All right, so in here I'm in Stock Viewer. VectorVest analyzes currently 2,086 stocks. That includes ETFs, inverse ETFs, LICs in there as well. Now what I'll do here is I'll just grab a good tranche. So let's say we grab that many there. So it's a fair few I've grabbed. Right click, add to watch list. And I'm going to put it into the watch list I've just generated, right? So it's the hot topics of interest, growth and income. I'll push on OK. This is just our starting block. It's not saying these are the ones we're going to own, but it's a very good starting point. So I've got 21 in at the moment. I'm going to whittle it down a bit. I'm going to look at the average of all these stocks. So right click down the bottom, view the watch list average. And what I'm going to do here is I'm going to have a look to see what this total portfolio looks like on average. All right, so you can see over here, it's had a fairly smooth left to right price pattern. All right, so that's always encouraging to see. And if I put on the earnings, wow, look at those earnings. Those earnings are rocketing up. A little bit of a weakness here. They're sort of sliding a little bit here, starting to pick up again. Certainly an incredibly powerful set of earnings across those stocks at the moment. So if you look at that alone, how easy was that to do? We're gonna refine it just a wee bit more. But those 21 stocks alone, there wasn't really a lot of work I had to do. I simply went to StockViewer, grabbed the first 20 odd stocks, put them into Watchlist, and I'm looking at the average. And there's not really too much here to fault, but let's just look a little bit closer, more closely, all right? So I'm going to maximize this up a bit. All right, and I'm going to go through some key definitions here. So let's quickly jump back to slide sets. I won't give you too many definitions here. And I'm going to work through the first one here, relative value. Relative value, RV. It's looking at the long-term price appreciation potential of a stock. So it looks at things like price, value, earnings, growth, AAA corporated bond rates, and risk, which are used to compute the relative value. So to give you an idea here, RV, long-term upside potential. So this one here, Stanmore Resources, is telling us that Stanmore Resources is likely, not saying it will, but it's likely to outperform a AAA corporate rated bond by up to 83%. All right, up to 44% for MMA offshore, Big River 51%. So you scroll down here. As you come down here, you'll see this one here, Weebit Nano. So this is on a scale of 0 to 2. The higher above 1, the better. So you see Weebit Nano's hasn't got a very good RV score. All right. You scroll down a little bit further over here. So you're going to pick out anything where the RV score might come under pressure. All right. So here, straight away, this one here tells me, you know, I just need to be careful that the long-term upside potential is not as strong as the other stocks. Let's jump back into our slide set. So long-term price appreciation potential. This is a fundamental indicator, relative value. Relative safety, it's an indicator of risk. Again, it's on a scale of 0 to 2. We make it nice and easy at VectorVest. Look at the consistency and predictability of financial performance, which are the primary factors in assessing relative safety. So how safe are those stocks? How safe are their financials relative to other stocks that VectorVest tracks? And again, on a scale of 0 to 2, so if I sort it by RS, we can see our safest ones here at the top of the list. Up top, New Hope, Whitehaven Coleman Resources have very strong RS scores, but as you come down here, you see those scores start breaking below 1. Okay, so just something to be aware of. And then coming back to our slide sets, the last or second last key one I want to cover here, relative timing. It's an indicator of short-term price trend. Now this one's really important because when you're holding on to stocks or buying stocks, you want to make sure that the momentum is continuing to go to the upside. Otherwise, you know, what's the point effectively of holding on to those stocks if they're losing you money? So that's what we've got to do. We've got to make sure that the momentum of those stocks are going to our upside. All right, so if I look at relative timing here, look at that Weebit Nano, even though it's got a weak relative value outlook, it's motoring in terms of the technicals at the moment. All right, so this one here is rocketing away. Look at that, look at the price. It's going ballistic. It's made an absolute fortune for some people over the last couple of days if you're holding on to a few shares here. But tell me what you see here that's concerning. This company's earnings are they're not effectively growing, right? At least the 12-month leading forecast and earnings. This to me is a big red flag. Sure, if you're a technical investor, ride the technical boom as it takes place. There it is. It's broken above 1 and it's holding up above 1. So it's off the races. It's booming away. But your fundamentalists are screaming in the background saying, be careful, be careful, be careful, because there's not too good an outlook here on the earnings. So you've got to decide what type of investor are you. If you are going to have exposure to this and you are pretty risk adverse, then of course you're most likely not going to be holding too many dollars in the stock. All right, so these are sort of things that we're looking for. So the first thing we do to start cleaning up a portfolio. Now, bearing in mind, let's look at the total watch list again. So this was the average of all those stocks. Incredible, you know, just the power of VectorVest, just there, just simply grabbing the top 20. You can see over the last 2 years and 9 months, it's been pretty much one-way traffic going up on those top fundamental and technical stocks. Beautiful set of rising earnings. Technical's been holding above 1 for most of the time. All right, there's not too much not to like about this, but we've got tools where we can strengthen it up even further. So what we'll do here, the first thing we're going to do is we're going to whittle out any stocks where the technicals are starting to go against us. In other words, the share price is starting to fall because that's hurting our portfolio. So you can see over here, anything where the relative timing goes below 1, these ones here, you can start to see that the technicals are starting to break down. So if you start to look at these stocks and take off the earnings, just leave the technicals. Let's beef it up a bit, just to make it a bit easier on the eyes. All right, so there we go. It's a little bit easier to see. You see the technicals are fading. As the technicals start fading, along goes the share price, right? So you're seeing this again, you know, that correlation between the technicals and the share price. So these are the weeds in the garden, if you wish. We sometimes refer to this as weeding the garden exercise. Remove the weeds, let the flowers flourish. Right, these are the weeds that are holding back the garden at the moment. And again, you know, you're seeing this time and time again, the power of that relative timing technical indicator. Look at this one here. Whitehaven Coal has been a market darling for quite some time, but you know, all good things at some point come to an end before the next cycle, certainly in share investing, and we've been seeing those technicals sliding for quite some time. Right, you can see, so Whitehaven Coal had an incredible run here, huge uplifts in the technicals, had quite a few surges up when the price, but the tide is now turned, and we just need to accept that, you know, that's the cycle, and remove the emotion. You're seeing the technicals fading away. Now's the time to step aside. And again, I can't give you personal advice. Speak to your financial advisor for personal advice, but using the VectorVest system, it tells us, okay, that momentum's slowing down, and we might reconsider this at a later date. Okay, so closing this one out here, you can see all of these here where all the momentum has been falling away. Pilbara has been another market darling over the last couple of months. So is New Hope and Whitehaven Coal, but they're now having a bit of a breather as we're seeing on the technicals breaking down. So I'm going to remove these. And when I do live presentations and present this to large audiences, often one thing I say is if it's painful to see the company names and it hurts because sometimes we have emotional attachment, it's human nature, then just hide them up. And then you're looking at the numbers and you're not letting your emotion get to you. But, you know, I'm guilty of it. Everybody's guilty of it. You might see a certain company name and straight away you go, it doesn't matter what I see. I'm just not selling this one for whatever reason or whatever it might be, right? Okay, so I've whittled out the underperforming technicals. Let's have a look at our watch list average again. All right, so look at that. We've improved those technicals. Let's have a look at our earnings. Our earnings are, wow, look at that, holding very nicely there as well. So just that basic exercise of just grabbing the top 20 odd stocks from StockView, putting them into watch list, and just simply removing the stocks where the technicals were falling below 1. Look what we've ended up with. This is phenomenal in terms of a portfolio, just that alone. What have we got? We've got 16 in total. All right, so we've got a little bit of a premium here because you've got a price of $11.94 and a value of $16.24. In fact, no, you haven't. It's under. So that's excellent. And that's one of the other things that we want to make sure. If you're a conservative investor, you want to buy safe, undervalued stocks rising in a rising market. Now, the market's not currently rising. All right, we are in a little bit of a pullback again in the market, but you've got a rising set of stocks that are undervalued. Those earnings are rising, and we're just waiting for the final ingredient. When the market starts to turn, we will jump in again. Now, VectorVest, we do time the market. We give you entry and exit type signals for when, so for example, if you're holding this portfolio and you were stopped out in any stocks, you wouldn't be looking to get back in until we get a green light to proceed again. Okay, but that's talk for a later date. Let's not jump too much into that. Just want you to be aware of it. All right, so we've now got a pretty robust portfolio that's undervalued, very good fundamentals, RV and RS on a scale of 0 to 2, well above 1. We know the technicals are motoring. Now I want to introduce you to this score here, or this definition here, VST. It keeps a score as such. Value, safety, and timing. So it's the master indicator. So it incorporates our RV and RS and RT all into one master indicator. So just to jump out and show you, it's not these three divided by 3. There's a bit more to it. A little bit more of the weighting goes into the technicals, because as we say, timing is everything, but also a good weighting goes into the fundamentals as well. So this indicator, value, safety, and timing, it's looking at the combinations of fundamentals and technicals. Now, running my eye down here, it's on a scale of 0 to 2. Anything above 1 is good. Anything above 1.4 is excellent. And, you know, stocks over 1.3 in Australia are very good too. So excellent, excellent. This is just shy of excellent, and then very, very good for the rest. All right, so from a fundamental and technical perspective, in fact, there's excellent, 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 excellent. I missed that one. So you've got 4 excellents, and then the rest are very good ratings. You'll notice here that we rate our shares buy, hold, sell. So there's a bit that goes into those calculations. Again, today I won't get too much into the nitty-gritty on that, but suffice is to say, if you've got a buy or hold rated share, that bodes well. You want to avoid getting a sell rated share. So if you see the red popping up with a sell rating, then you just want to be a little bit careful. All right, so that was our growth type portfolio, because we're looking for growth and we're going to build an income portfolio next. All right, so just bringing this up again, I'll just simplify this, make it nice and simple. I'm going to remove some of the indicators here. I want to show you what these earnings are looking to grow by. So you have this indicator in VectorVest called GRT, earnings growth rate, GRT. This is what these companies are looking to grow their earnings at. So not only are you seeing the earnings, past, present, forecast earnings on track to grow, but you're also seeing the earnings growth rate, the GRT indicator provided by VectorVest. So these companies are looking to grow their earnings by a whopping 28% on average. So this is it's a pretty powerful growth portfolio from what I'm seeing right now. If I was to add in dividends, all right, so let's add in dividends, and we're going to build a specific dividend one now. If I look at the dividends, the yield, well, there's nothing to sneeze at here. It's still doing about 4.2%. Let's see if there's any franking credits. So we can add in both the interim and the final franking credits. So just wonderful functionality that VectorVest offers. So it's about 56%, about 50% franked. All right, so they're about 50% franked. They're not fully franked, they're 50% franked. And you're looking to get around about just over the 4% mark. So it's fair to say that this is most certainly a growth and income portfolio. So you're getting the best of both worlds. You're getting good dividends, and you're also getting capital growth. A lot of investors are very happy with the type of portfolio. Let's say you're after just purely dividend yield, and we're going to build this one now, and you're not as concerned on capital growth. Well, let's go and build that, right? So I'll click new watch list, so you see how we do it. And in here, I would call it, say, income portfolio. All right, click add. So I'm now generating this one here. So it's all ready to go now. So I've loaded that in. So now I say to myself, well, okay, great, but what now? What do I do now? So remember what we did. We go back up to stock view. So these are our top fundamental and technical stocks at the top of the list. Doesn't mean they're the best dividend payers, but what we're going to do here is we're just going to pick out the juiciest dividend payers that have got the best combinations of fundamentals and technicals. So it's all at our fingertips. You can do this just with a few clicks of the mouse each day. So I'm going to scroll across over here, and I'm going to go to the dividend yield column. And I'm just going to simply pick out the ones with the juiciest dividends to begin with, and then we'll refine them further. So there's a 6, there's an 8, 8, 6, 8, a 2, a 2. I'll leave this one because it's only 1. 1.4 is a little bit low. 8, 6, 3. If it's too good to be true, it might be, but we will need to investigate it further. 16%. All right. 2.67. Whoa, 17% for this one here. 7, 2.7, and let's throw in another one for good luck. All right, so I've just simply clicked on each one. If you're an existing subscriber, all I'm doing here is pushing my control key, clicking, and then selecting my next one, pushing my control key and clicking, that effectively highlights a selection. I then right click, and it doesn't matter where, and add to watch list. And from here, I can then come into my hot topics of interest. Here we go, income portfolio, and push on OK. All right, so we've put that in to our portfolio. I'll just make this all nice and neat to begin with. So here it all is. This is the starting point. It's pretty rough to begin with because we're going to have to refine it up. So this is just the unrefined product as such. But let's see what we're working with to begin with, because hopefully there's not too much work to do. It should be quick and easy now. All right, so we can see here, my goodness, this one looks pretty powerful on its own right already. Look at that. The yield of 5.58. So it's a bit better than the growth and income portfolio because it's, you know, it's about just over 5.5%. And it's about 80% franked. So nearly fully franked, 80 odd percent franked. You can see the growth rate, a whopping 29% that these shares are looking to grow their earnings by, and you can see earnings have held up and holding steady. Okay, so very good, but we can make it better. So remember what I noted here. We need to just be mindful of any company that's got a sell rating. So straight away when I'm fixing up my income portfolio, I want to remove anything with a sell rating. Why? Because if I show you, if I graph this one here, all right, the technicals are starting to break down on these sell rated companies. You can see here, technicals have been falling, and the share price is effectively starting to go with it. Okay, so again, you'll see that the sell rateds are typically associated with low RT scores. Remember that, short-term price momentum, relative timing. There's your RT scores below 1, and these also sell rated. All right, let's move those out straight away. So that was easy, just quickly clean that up. All right, and then what I'm going to do is I'm going to go across here, and I'm going to just pick on any company where the dividend safety, I haven't covered this indicator, but I'm going to talk to you about it now. Dividend safety is on a scale of 0 to 99. Think of it like as your report card back at university or school or wherever you might have done studies as a child or student. And if you got a report card, with below 50, it was often a fail grade. I mean, it was a fail grade for most institutions. All right, so you were wanting to be 50 or better. Now, in Australia, what we've found over the years is that a dividend safety score of 50 or higher notes to us that you're going to get a fairly consistent and reliable dividend paying stock. Where the score falls below 50, it's not to say that you won't get that dividend, but your odds are starting to stack up against you. So if I look at this one here, Unibel, it's got a dividend safety score of 14 out of 99. At the moment, it's looking to pay out 17%. And this earnings yield here, this is what the company can effectively look to pay right now. So it's looking to pay out 17%, yet it's got about 12% capability right now of paying out. So, where's it going to get the remaining 5% to pay out? So one of the reasons why the dividend safety is coming under pressure. It's going to have to either borrow more money, cut the dividends, or work out another solution where it might be a partial payment and a later payment. Who knows, right? But as an investor, why put yourself in that situation? So straight away, if I'm a dividend investor, I look at this and go, look, anything below 50, I need to just be careful because the odds are not in my favor. All right, so dividend safety, I'm going to take the ones where the safety below 50, I'll take them out. And this is the final one I'm left with. So I've got 8 here. They've all got pretty good dividend safety scores. Let's have a look. Price of 15, value of 19, so it's undervalued. Good RV, good RS, above 1. Right, so the fundamentals are strong, they're above 1. Technicals are above 1, solid. Good VST, the combination of all those ones there. We've got a dividend yield of 5.49 and a dividend safety on average of 54 out of 99. That is good. All right, so I come in and I'll now graph this, and let's make this a little bit neater and easier for you to see. Okay, so here it is. So I'll just turn all this all off for now, and we'll put each one on. Right, beautiful set of stocks. put on the dividends in dollars and cents, and let's make this an area and change the color. Just make it jump out a bit more for you to see. All right, there we go. So that's dividends paid out in dollars and cents. This is it in yield. So the dividend price divided by the share price times 100 to give you the yield. So you can see the yield is currently at about 4.62. If you run a best fit line through here, you can see it's been just over about 4.5% on average. And we then have a look at the franking credits, 76 and 76, so about just over 2/3 franked. Very nice set of dividends and solid franking credits in there as well, with all of our companies having reasonable dividend safety, solid dividend safety scores. So here's our dividend safety across all of those stocks. In fact, I said 52, but after we cleaned it up, we've now taken it to 67. So look at that, a very solid set of dividends there on average with a 67 out of 99 score. That's an excellent safety score track record across those stocks. So this one here is a dividend paying portfolio, but it's fair to say that, you know, if you were after capital growth, you'd be pretty impressed with this too, because it's got a growth rate outlook there of looking to grow its earnings by 27% with a pretty robust set of earnings as well. So there you are. There is the income portfolio. So we built both a growth portfolio today and an income. So you might want to jot some of those down and see what you think. There is the income portfolio: MIN, QBE, RIC, XRF, WDS, YAL, DTL, and S32. Those are the ones that jumped out, 8, just on the fly. And you can make them even better when you play around with VectorVest. You'll make it even better. And then your growth portfolio here: SMR, MRM, BRI, WDS, HLO. I'll just scroll this down, so you just might want to jot them down, and you might want to take it a trial to VectorVest and plug these yourself into the watch list and see what you think. But just follow my strategy that I showed you today. So in wrapping up, I'll give you the link if you want to trial out VectorVest. I highly recommend you do so. Do this exercise. It changed my life 10 years ago. I wish I'd done it 10 years earlier than that, or 20 years earlier than that. I never would have had to have struggled. I wish I had these tools years ago. So remember what I did? I just simply went to viewers. I went to Watchlist viewer. I created a watch list. So I had to create a group. I gave it a name. And once I created the name, I then created the watch list within the group. And then all I did is I went to stock viewer, and I just simply grabbed top 15 to 20 stocks, or call it 20 to 25 stocks for my growth and income portfolio. So I just simply went there and grabbed a chunk like that. Well, actually, you start at the top of the list. And so I grabbed a chunk and I just went add to watch list. There we are. And I put it into the watch list that I generated. And once I'd done that, I went back to my watch list. All right. So I put them all in. And remember what I did? I just simply sorted them by RT, relative timing, and removed any stocks where the RT had fallen below 1. And also would remove anywhere the rec equals sell. Chances are it's going to be the one where the RT falls below 1. That was it, basically. I had a very solid set of fundamental stocks that also, in this case, paid good yield. I repeated the same exercise again. I generated an income portfolio, called it income. This time around, I went back to stock viewer. And all I did this time around is I just scrolled across. I said, right, give me the juicy dividend payers. I just scrolled my eye down the yield column, 6, 8.81. I've just pushed my control key and I'm just clicking on the high yield payers. I scrolled down a bit more and I just kept finding the yield payers that appealed to me. 8, 6, 3, 16, 2, 17, 2. There's some incredibly juicy dividend payers here. Once I was happy with the ones I selected, I right clicked and I just simply selected add to watch list, and I put them in to the watch list I generated. I then went back to the watch list. All right. And all I did in this particular case is I made sure that any sell rated stocks were removed, any RT, relative timing stocks below 1 were removed. And then I just concentrated on the dividend safety column and I removed any dividend safety scores that were below 50. And this is what I was left with: a stellar set of dividend paying stocks with strong track records. And that was it. All right, you can do it. You can build a growth portfolio. You can build an income portfolio. You can build a growth and income portfolio. It's not hard when you have the right tools, but sadly, a lot of people don't have these tools. They end up making costly mistakes to realize what they need. So I'm here today to show you that you can do it. All right, so let's see. There was one last indicator I wanted to refer you to. It's called the Comfort Index. So Comfort Index is an indicator which reflects a stock's ability to resist severe and or lengthy price declines. CI is based solely upon a stock's long-term price history. So on these two portfolios here, to give you peace of mind in terms of, you know, how resilient they are, I'm going to throw in that CI indicator. So in VectorVest, add parameter, it's under capital appreciation. Once you play around with this, it's not hard. You can save your layouts. You don't have to reinvent them. I'm doing them on the fly just to show you the functionality. All right, so here's your CI, Comfort Index, scale 0 to 2. Look at that, breaks above 1 there, and it doesn't go below 1 since. So where's my CI? 1.06, it breaks above 1, look what it's done. So it doesn't break below 1, it gives us confidence. All right, growth and income portfolio, same deal. Watch list, there's the CI, let's pull it back. Where does it break above 1? It broke above 1 here, then it went down again. Had a brief sort of rally there, then came off. But here it broke above 1 and it never gave up since. So it's been doing it now for about just over 1.5 odd years. There it is. There's your CI, and look at that. It's really encouraging to see it continuing to push up. All right, the power is there for you. All right, so if you like what you see, trial out. Why not trial out VectorVest for 30 days? Give it a go. Build that watch list. I'd love for you to build that watch list. You know, hop into VectorVest and give it a go. Now, if you have any questions on this, so let's do this. I'm going to put in my email address as well. So if you have any further questions, anything we can help you with, email me at vectorvest.com. All right, we're here to help. So we can help you get set up with a trial if you want. I'm happy to go back over the methodology of what I did today. If anyone that wants to get in touch. All right, so there it is, Russell Markham at VectorVest.com. If you go to that link, VectorVest.com.au trial, and you'll be greeted with this page here. All right, and you can trial out for $9.95 USD. So call it 13 or 14 Australian dollars, and you can get to trial it out for 30 days. It's best $13 or $14 you ever spend. All right, so I hope you've enjoyed it. Let me know in the chat box there. How did you guys find it today? Was it easy? I've got a comment here. Thank you so much. Thanks, Russell. Nice and clear. I really hope I've made it simple and easy for you to understand. I don't know about you, but over my investing life, I've been to many presentations, and some presentations I walk away with my head spinning. I go, oh my goodness, I don't think I'd ever be able to do that. I hope this is one of these presentations where you walk away and go, my goodness, it wasn't hard, and look at the results. All right, and bearing in mind that the market's not exactly powering up at the moment. It's sort of come off over the last 2 or 3 odd weeks, and to produce these sort of results in the current conditions is pretty spectacular and proof of the power. So yeah, there it is. Stock viewer should be your best friend. Find them, put them in, and then just screen them how I showed you. We've got plenty of other tools in VectorVest. You can test ideas, you can build portfolios and track them. You can screen, rank, and sort according to all sorts of criteria in our Uni Search tool. But for today, this is all you need to build a brilliant income and growth portfolio. So I hope you've enjoyed it. I'll just put that last slide if you're just asking on the chat box there for the last slide there. So there's that link again. I'll transition across to me. Here I am again, Russell Markham, Director of Education for VectorVest Australia. It's been a pleasure having so many of you along today. And for those watching the recording, I hope you've really enjoyed it too when you get to watch it. Any questions, again, please let us know. Let's just transition it to the last slide again. Drop us an email, and look forward to seeing you at the next hot topics of interest. Check your email there. Look forward to it. We've got, I think it's 3 more to go. So we've got some superb hot topics yet to take place. Thanks again for coming along today. Have a great rest of your day. Bye for now.